I think it's 8:30. We can move with the class. Like I said, my name is Asiwaju. I'll be taking the PM class tonight. And by default, I will be taking the class, Monday class for PM. All right. Please confirm you can see my material being shared.
Yes, confirm, sir.
Fine. Now we are looking at our first topic tonight. Our first topic is cost estimation. Before I go into the topic proper, first is performance management. What is performance management? What does this subject entail? And how do we approach this class to achieve the desired results? First is performance management as a course or as a subject. It's an integral part of company's management that is principally concerned with the performance of the company, the performance of its production process or its business processes. Why are we interested in measuring this performance? The purpose of measuring company's performance is to ensure that the objective of the company is consistently achieved. If our objective is to maximize profit, then we must review our business processes. We must ensure that all the processes are working up to the optimal performance. If any process or processes are not meeting the expected performance, this could have impact on achieving the primary objective of the company. We have tried to explain what is performance management. Now, what is ICANN expectation? Or what are ICANN expectations? Now, if you go back to your syllabus, ICANN specifies that for you to be able to write performance management and perform very well, you must be knowledgeable in 3 aspects of accounting. The institute says for any student to be able to write performance management, the student must be skillful in 3 areas of accounting. What are these areas? One is you must understand cost accounting. Performance management is sitting on 3 points, 3 cardinal points. What are these points? One is cost accounting. You must have a good understanding of cost accounting. Number 2, you must understand management accounting. Then number 3, you must have a good knowledge of quantitative analysis. These 3 components put together sum up what we call performance management. All right. That means your knowledge of cost accounting that we have acquired at the previous level or at our previous studies. For example, some of us have passed through foundation class. At the foundation class, you are going to do management information system. Management information system is divided into two parts: cost accounting system and information technology system. That means for you to be in this class, you have acquired a knowledge on cost accounting. Number two is your management accounting knowledge. Management accounting knowledge is a proper subset of cost accounting. Then number three, you must understand quantitative analysis. Having said this, we now move to the topic for today: cost estimation. What is the learning objective here? What are you supposed to know, or what are the learning objectives? One, you must understand what is cost estimation. You must understand cost behavior. You may take down one, when you have to, for you to estimate cost, you must understand cost estimation. You must understand cost behavior. You must understand the different methods of estimating cost. Now we can now go to the business proper. What is cost estimation? Cost estimation can be defined as the measurement of historical cost. Measurements of historical cost with a view to helping in the prediction of likely future costs, so as to assist management in planning, controlling, and decision making.
Please, sir, come again with the definition of cost estimation.
No, don't worry, I will. Cost estimation. This can be defined as the measurement of historical cost. If you are looking at the screen, look at my highlights. Cost estimation can be described as the measurement of historical cost with a view to helping in the prediction of likely future costs, so as to assist management in planning, controlling, and decision making. Let us explain this definition. Why are we interested in estimating costs? He said, measurement of historical cost. You are reviewing your past cost. You are reviewing your previous cost you have incurred. Why are you reviewing your previous cost? This is to assist you to be able to predict or estimate likely future costs, so as to assist management in planning, assist management in decision making. For example, Let us look at our study center, equity professional. Before the commencement of this diet, management met sometime in November after the exam to review past performance and to prepare for May 2025 diet. At this meeting, part of our discussion is we need to prepare for next diet that will commence on the 4th of January this year. And part of our preparation is to print student study pack. Part of the company's preparation is that we need to print study pack for our students. For we to print study pack, we need to know the cost we are likely to incur. As at the time we are doing this planning, we don't know the number of students that we enroll for the class. As at that point of our planning, we do not know the number of students that we actually apply or enroll for this class. But we need to make plans ahead of the lecture commencement. Now, when I said, okay, how much are we likely to spend for the printing of student study pack? We now go back to our previous cost. We look at our cost book. How much did we spend for November diets? Let us assume we have spent 2 million naira for the printing of student study pack. We are now reviewing our past cost. Why are we reviewing our past cost? We are reviewing our past cost so as to provide us, so as to help us in the prediction of likely what future cost. We measure past cost. We review the past cost with a view to helping us to be able to estimate what is the likely cost we are going to incur for the printing of student study pack for the coming diet, May 2025. That is the concept of cost estimation. Measurement of historical costs with a view to helping in the prediction of likely future costs, so as to assist management in planning, controlling, and decision making. Now, having explained that, the next explanation is cost behavior. Please note, an understanding of cost behavior is a prerequisite for cost estimation. I will repeat that sentence or that statement. An understanding of cost behavior is a prerequisite for cost estimation. What does that mean? It means that for you to be able to estimate future costs, you must understand how costs behave. For you as an accountant to be able to estimate likely future costs, then you must have an understanding of how costs behave. What is cost behavior? Cost behavior can be defined as the manner or way in which cost behave or in which cost respond to change in activity level. Deliberately, I'm just keeping the lecture pace a bit slow so as to enhance understanding. Cost behavior. This can be defined as the manner or way in which costs respond to change or changes in the activity level. What is the activity level? The production level or the sales level. Cost behavior can be defined again as the way or manner in which costs respond to change in production volume. Under the cost behavior, you can have variable cost, you can have fixed cost, or you can have mixed cost. Look at it here, please. You can have, let me bullet this. You can have variable cost. You can have fixed cost. You can have fixed cost, or you can have mixed cost. So what is variable cost? What is fixed cost? What is mixed cost? Variable cost. These are costs that vary in direct proportion to changes in the volume of production. Variable costs. These are costs that vary in direct proportion to changes in the volume of production. The more we produce, the more variable cost will be incurred. A good example of variable cost is direct material cost. Material cost is a good example of variable cost. If you look at material, the more you produce your products, the more raw materials you are going to use. That means the more raw material cost you are going to incur. That is variable cost. Labor cost can also be variable cost. The more we produce, then the more we are likely to pay labor. Please don't make that mistake. When we are saying labor, we are referring to direct employee. People that work within the production center. Like if you look at Nigerian Bottling Company, we have direct employees, employees that work on hourly basis or that work on per unit basis. The more bottle of Coke produced, the more labor hours spent, and the more money we pay the production worker. In that case, that labor cost becomes variable cost. At times, labor cost may be fixed. If you are a salary employee, then you are regarded as an indirect employee. You are not in production directly. You are part of accounts department and you are paid monthly salary. Your monthly salary is fixed. In that case, that your labor cost will not be categorized as variable. So if you are talking of labor cost variable, we are referring to direct employees that work in the production center. So please note variable costs that vary in direct proportion to changes in the volume of production. Number 2, fixed cost. Fixed cost. These are costs that remain fixed in total, regardless of the volume of production. These are costs that remain fixed in total, regardless of the volume of production. Whether you produce 10, whether you produce 20, whether you produce 30, or whether you produce 1,000, these costs remain unchanged, remain fixed. A good example of fixed costs is factory rents. If you pay your rents for your factory, whether you produce 1 or you produce 2, the rent you pay is fixed. Rent is not based on the volume of production. That is fixed cost. Then number 3, in between variable cost and fixed cost, we have the mixed cost. Mixed cost. These are costs that are partly variable and partly fixed. Variable cost, sorry, mixed cost. These are costs that are partly variable and partly fixed. Any example? Any example from the class? Yes, you can unmute yours. You can unmute and speak, then mute back. Or you can send in your response via chat. Any example of mixed cost? Costs that are partly variable and partly fixed. Any example?
Repairs and maintenance, is it okay?
Okay. What is the fixed aspect? What is the variable aspect? You want to explain?
The cost of repairing maybe the factory machine, it can vary over time.
It can also be fixed over time. Is that what you are saying?
No. The variable aspect
at least you attempted. All right, thank you. Thank you. A good example is electricity bill. If you look at electricity bill from power holding, there's what we call fixed charge. And there's what we call, there's a portion that is called fixed charge. They also call it meter maintenance fee. Once meter is allotted or allocated to your house, NEPA will charge you monthly meter maintenance fee. That amount is fixed. In as much as there's a meter attached to your flat or your building. Now, the second aspect is charges based on your consumption. NEPA will now give you total amount for the month. That total amount contains 2 charges: monthly fixed charge and charges based on your consumption. Whether you use light or not, NEPA will give you the fees charge. If you are not at home for 1 month and you are not using lights, NEPA will still give you fees charge. No consumption for zero consumption for the month. They will now say, okay, plus the fees charge. For the fact that NEPA has given you meter, the maintenance fees price we apply every month. All right.
Okay.
Any question, please?
Okay, so I wanted to ask, does salary and wages come in here as a mixed cost? You know, for salaries, you already have it fixed for the staff, but when you employ contract staff, it's based on a particular period. Could we say that that's a mixed cost?
Okay. If it is based on period, that means it's still a fixed cost. When we say variable cost, it must vary with the volume of production. If that employee's salary is based on the volume of production, the more you produce, the more we pay you, then it becomes a variable cost. But if it is based on contract for 2 years, that means within that 2 years, your salary is fixed. Is that not, please? Is that not, please? I'm referring to the questionnaire.
Yes.
The person asked question.
Yes.
That means for that 2 months, you place the staff on contract. We are going to pay, you are paying that staff monthly fixed salary. Is that not? If that is the case, that means that is not a variable cost. But if that employee salary is based on production, that means in the first month, he produced 1,000. You pay the employee 100,000 naira. In second month, he produced 1,500. You pay the employee 150,000. That means that employee salary is a variable cost. It is based on the volume of what? Production.
Production. Okay.
Is that clear, ma'am?
Yes, sir. Thank you.
All right, great. All right, if there's no other question, we can move to other discussion. Yes, Jide.
Hello, good evening.
Jide.
Good evening. Can you hear me, please?
We can hear you clearly.
Okay, thank you, sir. Okay, so now I want to ask a question. It's in line with the explanation you have just made now. So while thinking about it, I feel that okay, let's take a school as an example. I feel that a school as an example.
A school.
Yes. Now, so now, I believe that teachers' salaries is an example of fixed cost. So now, so does it mean that there are no variable elements as regards school management? Because now, if for instance, if we are to produce a kind of operating statement for a school, for instance, so what are the elements that will make up the direct costs?
Okay. I want to assume you are running a school. Okay, no problem. Now, for teacher's salary, there could be fixed elements, there could be variable elements. Now, if the teacher's salary is based on monthly salary, we are paying you 50,000 every month. In that case, it becomes a fixed cost. Now, if that teacher's salary is now say, okay, after you have finished teaching your normal school hours between 8 a.m. and 2 p.m. normal school hour, Any extra time you now lecture, maybe you are doing extra lecture. Any extra time you now, after official hour for teacher is 8 to 2. You close, you go to your house. Now you now want to do lessons for students. Now say, okay, we need to use some of our teachers. Now say, okay, if you now wait for between 2 to 5, you are now doing 3 hours lecture. Now the school can now have that, okay, per hour, we are paying you this rate per hour. That means for that lesson, we are paying the teacher per hour. For the normal work, we pay the teacher monthly salary of 50,000. For that lesson per hour, we are going to pay you per hour. We pay you, say, maybe we are paying you 1,000 naira per hour. So if you now stay 3 hours, we pay you 3,000. If you now work for 1 week, we pay you 15,000 for lesson. That particular aspect, at the end of the month, we are going to pay you the monthly fixed labor salary. We are also going to pay you the lesson fee that is based on hours. Is that clear? That means the total payment we are going to pay you will contain the fixed aspect and the variable aspect. In that case, that teacher's salary, the total payment to the teacher becomes a mixed cost. It contains elements of fixed and variable. Remember that some teacher may not do extra lesson. That means they will not collect that variable rate per hour. And if a teacher should just work for 2 hours, they will only collect 2,000 naira. That means that rate varies. If the teacher is able to work for, say, assuming we allow the teacher to work for 5 hours and is willing to work, and we have them waiting, that means we are going to pay the teacher 5,000 for that lesson, for that day. That means we are paying him. That means that salary contain, total salary contain element of fixed and element of variable. I hope that is clear. So
Yes,
if you
sir.
are defining your, if assuming in your company, how you are going to define your cost will depend on the nature of your business. Do you understand? Your nature of your business will guide you to how to define your cost. What we give students, we give you all the knowledge. That is why ICAN is wide. I can find myself in banking. Costing in the banking sector is different from the costing in construction sector. There's peculiarity of the business. You are not going to look at the peculiarity of the business in defining the costing system. Is that clear, sir? All right. We move on to the other discussion. Now we look at cost estimation techniques or cost estimation method. What are the methods that we can use to estimate cost? Basically, there are 5 methods of estimating cost. Basically, there are 5 methods of estimating cost. One is, you're welcome, Jide. One is the engineering method. Number 2, account analysis method. Number 3, scatter diagrams. Number 4, high and low method. Then number 5, linear regression analysis. These are the 5 methods you can use to estimate costs. Number 1, engineering method. The engineering method is also known as work measurement method. The engineering method is otherwise known as the work measurement method. Let's explain this briefly. It's a method of estimating cost. This is a method of estimating cost by analyzing the relationship between inputs and outputs in physical terms. I'll take that again. Engineering method. It's a method of estimating cost, whereby you analyze the relationship between input and output in physical terms. What does this mean? For you to use engineering method to estimate cost, you are going to define the physical input requires to achieve a specific output. To use engineering method, you are going to define the physical inputs required to achieve a specific output. Let us expand this with explanation. Assuming you want to produce a phone. You plan to produce a phone. You now say, okay, I want to produce a Samsung. I want to produce my own version of Samsung. And you want to know the cost of producing one Samsung. Now you can use engineering method. You are going to invite an engineer that understands the technical requirement for producing a phone, Samsung. The engineer will now tell you the input materials required for this phone. For you to produce this phone, you are going to require the screen, the keyboard pad, the software parts, the battery, and what have you. The engineer will define the input materials required. Because this engineer knows about phone very well. He will now tell you all the raw materials required, the physical raw material required to produce this phone. The same engineer will tell you the labor hours required to be able to couple a phone. The machine hours required to be able to produce a phone. The engineer will have given you the input materials, the labor hours, the machine hours. Now you now come to, okay, you now apply prices and rates will be applied to the physical items. That's okay. What is the cost of a screen? You put a cost to the screen. What is the cost of a battery? What is the cost of the keyboard part? What is the cost of the software part? You are going to now put price or prices to all the items required to achieve a phone production. If you are taking this process, you are now going to sum up all the individual costs to achieve the total cost estimate for a phone. Once you are taking this process, then you are applying engineering method to cost estimation. If you take this process, that means you want to apply an engineering method to cost estimation. Any question, please?
Yes, sir. So are you saying, hello, sir? Can you hear me?
I can hear you. I can hear you now. Go ahead.
Yes, sir. So are you saying that engineering method has to do with anything electronically, like what you just said, producing a phone, machines, and all of that. So it has to be at that point.
Okay, let me answer you quickly. Once any product that you can define the physical inputs, you must be able to define the physical inputs. If you take a laptop now, you can define the physical inputs. So it can be for electronics, it can be a building. You can go to a construction engineer or a builder. I want to build this 3-bedroom flat like this. Give me the cost estimate. The engineer will now go. If you have to build this, what is the number of blocks required? Because the engineer has technical understanding. Even before you commence construction, it can tell you the money you are going to spend from beginning to the end. We have the quantity surveyor. They will tell you, this is the number of blocks you require to build these 3-bedroom flats. This is the number of cement you are likely to buy. This is the number of sand you are likely to use. They will give you all the input materials required for that product. So what we are saying is, any product that is possible for you to define the input material to achieve a specific output, then you can use engineering method. Is that clear, ma?
Yes, sir. Very well. Thank you.
Yeah. So once you can define what you require to achieve a specific output, then you can use engineering method. What you need to do is to look for somebody who understands that product. If I want to build my duplex now, I'll just consult architect. First, give me a design. Next, I will consult engineers, builders. Tell me, sorry, Jide, please hold on. Tell me how much I'm likely to spend to be able to complete this construction. The engineer will go to work. They will do the measurements. In fact, they will do all the measurements for you. They will give you the cost estimate. In fact, this method is very common in the engineering sector. Yes, Jide, let's hear your view or your comments.
Okay, sir. Thank you so much for this, sir. So you have really explained this engineering method so well, because I used to have a different perspective of it. So now my question is that the way you have explained it now, it appears that it looks like when you want to compute the cost, you just list out items and do the totals. But with the word engineering, I used to think that okay, it will have one very difficult formula. So please, sir, I want you to clear my doubt, sir. Thank you.
There's no formula involved. You know, for us accountants, there's no formula involved for us. What we just need to do is this. You know, assuming if you work in production, definitely you'll be in accounts. But that production department, the head of production is an engineer. It's not going to be an accountant. The man at the production center that is manning that machine is an engineer. Most of them, they are mechanical engineer. So they have gotten the knowledge from school that, okay, how to estimate this engineering, because they would say, okay, look, all we need to do is that to produce this particular product, what do we require? They are going to list all the raw material required to produce a bottle of Coke. Okay, we require this to produce this Coke. I require this raw material. Now they will not say, okay, your own job as an accountant, they will list out all the materials for you. You now go to the market and say, okay, wait, let me go to the market. What is the cost of this raw material? You invite vendors to give you quotations from different vendors. That is your own job. But they will give you all the raw materials they require to achieve the production. Your job as an accountant is to now source for vendors to give you quotation. You now try to compare price. Okay, that means when you now look at different prices, you now say, okay, this is what we are likely to incur. This is what we're likely to spend. So there is no formula involved for you. That's why everybody have, individual, we have our own specialty. I'm an accountant. I'm a management accountant by my work. So when it gets to my work, I'll just ask the engineer, please supply me this information. So I will now work with that information and bring out cost for the company. Is that clear, sir?
Yes, sir. Thank you very much, sir.
Right. But please note, this method can only be used if it is possible to define clearly the input material required to achieve a specific output. Where you cannot define the input material required, you can use this method. And also note, this method can be time consuming. It can consume time. All right. Number 2 method, account analysis method. In some textbooks, you can also see it as account inspection method. You can call it account analysis method, or you can call it account inspection method. Now, this method, unlike the engineering method, this method uses information, cost information contained in the ledger account. The account analysis method uses cost information contained in the ledger account to estimate likely future costs. This cost information will be categorized into variable costs, fixed costs, or mixed costs based on the personal judgment of the accountant. Hello? Let me take that again. Account analysis method uses the cost information contained in the ledger accounts to estimate likely future costs. This information are analyzed and categorized into variable costs, fixed costs, and mixed costs based on the personal judgment of the accountant. What we are saying is that if I want to use account analysis method, I will go back to my company cost ledger account. I will now say, okay, I'll go back to our past costs. This is very common. This is usually done by accountant. You go back to your past costs. Now say, okay, this is the past cost we have incurred. You now look at the cost. You now say, okay, based on the way this cost is behaving, this cost is a variable cost. Based on the nature of this other cost, this is a fixed cost. Then this is a mixed cost. I will now categorize the cost into variable, fixed, and mixed cost based on my personal judgment as an accountant. I can now use this information to predict what future cost. Please note, this method is very simple. It's mostly used, but one limitation is that it is based on the it could be based on the subjective judgment of an accountant. The accountant may be subjective. How do you know that this particular, if you look at it in practice, it is not very easy to define one cost as a variable cost or define one cost as a fixed cost. You are going to look at the behavior of the cost. So, and that can introduce human subjectivity. Is that clear, please? All right, any questions? All right, thank you.
Yes, sir. Yes, sir. Hello, sir. Sorry for taking you back. Network cut me off. During when you wanted
don't
to
let
start
network cut you off.
I beg no vex,
All right, we'll try and just do a small recap. When we say account analysis, we said unlike the engineering method, this method uses cost information contained in the ledger accounts. This cost information will be classified into variable cost, fixed cost, and mixed cost based on the personal judgment of the accountant. That is what we do as an accountant. You just go to your previous cost record in your ledger account and say, okay, the way I'm looking at this cost, this one is a variable cost. This one is a fixed cost. This is a mixed cost. Based on your judgment as an accountant. Once you have been able to categorize all the costs, you now say, okay, definitely you cannot estimate future costs. If it is fixed cost, that means whether if you produce 10,000 next month, or we produce 20,000 next month, this cost will still remain fixed. It's a fixed cost. Let's assume month 1, we produce 10,000 units. We incur variable cost of production. We incur fixed cost of production. We now have total cost of production. Next month, we are planning to produce 15,000. We now want to estimate what is the likely cost of 15,000 next month. Since you have been able to categorize your cost into variable and fixed, that means whether you produce 15,000 or 20,000, the fixed cost will not change. You now introduce your variable cost per unit. You can now use that variable cost per unit to multiply number of units you are planning to produce next month. That will now give you total variable cost for next month plus total fixed cost. The total fixed cost will not change. Then you can estimate your likely future cost. Is that clear, please? All right.
Yes, sir.
Number 3, scatter diagram. This method involves plotting on a graph the total cost for each activity level. This total cost is represented on the vertical axis. That is your y-axis. And the activity levels are recorded on the horizontal axis, your x-axis. A straight line is fitted on the scatter of plotted points by, this is wrong, by visual, it should be visual, not virtual, by visual approximation. It should be visual approximation. Yeah, this is the right spelling for this. A straight line is fitted on the scatter of plotted points by visual approximation. Now let me try to explain this with the aid of a small graph. Let me explain this with a small graph. Let me explain this with a small graph. All right, please, let's just take this a small graph. Assuming you want to use, please don't mind that I'm trying to draw this in the classroom. It's not, let me just try to straighten it, okay? Okay, I'll try. Okay. You guys are enjoying, you know. Lecture is coming to your bedroom. Just like, why is it disappearing now? Okay. Okay. This is your Y. This is the X-axis. Your Y-axis, this is the total cost. The total cost is here. Total cost. I'm going to use TC, total cost. This is volume of production. Now look at it. You can just do like this. When we produce 5, the cost somewhere here, the cost is somewhere here. When we produce 10, the cost is somewhere here. Look at it. When we produce 15, we have the cost somewhere here. This is what we call scatter diagram. When we get to 20, this cost falls slightly. Let's assume 25. The cost is somewhere here. We say scatter diagram. It's a method. This method involves plotting on a graph. This method involves plotting on a graph the total cost for each activity level. This is the total cost for product when we produce 5. Activity level 5. The total cost is here. When we produce 10, activity number 2, total cost is here. When we produce 15, activity number 3, total cost is here. We said this method involves plotting on a graph the total cost for each activity level. This total cost is represented on the vertical axis. The activity level is represented on the horizontal axis. A straight line is fitted on the scatter of plotted points by your visual approximation. Look at the straight line. If I want to draw straight line, I'll just go like this. Visual. Look at it now. Now, let me explain this. Even though the examiner may not ask you to start drawing, the rule, but it's assumed that you have gotten this knowledge from quantitative techniques. If you are drawing scatter diagram, the rule is that you are going to draw your line in such a way that the scattered point will be divided into 2 equal parts equally. Now, in this case, I have 5 points. I have 5 points. Look at the 5 points. 1, 2, 3, 4, 5. I will now draw that line. If you have odd number, you are going to draw your line in such a way that you are going to cancel one of the points so that you can look at it now. I have 2 points at this end. I have 2 points here. I now draw my line in such a way that I will now cancel out one of the points. 2 cost is here, 2 cost is here. This is scatter diagram. If you have even number, that make it easier for you. As me, I've gotten 10 number. You are going to draw the line in such a way that 5 will fall to one part, 5 points will fall to one part, 5 points will fall to the other part. You now draw your straight line along. You are going to fit your straight line on the scattered of the plotted point using what we call visual approximation. That is scatter diagram. Any question, please? But no, this method may not give you, this method is, you are using your vision, is a bit subjective. You are using your own intuition to draw the line. So it may not give you, of course, we call it cost estimate. We are not saying the cost is going to be the actual cost. When we are estimating cost, is to give us something we can work with. Just like if you are doing budget, you budget some amount you want to spend at the market. You can get to the market and spend more or spend less, but you need to create an estimate of what you are likely to buy or what you are likely to spend so that you know how to plan your pockets. That is the concept of estimating. At every point in time, company will need to estimate because we need to plan ahead. Like the example I gave, we need to prepare for May diets. If you are running your business, okay, some school resume today, some will resume next week. So if you are running a school, you need to prepare for the student resumption. That means you need to plan ahead. Part of your planning will involve cost planning. Your cost planning will involve cost estimation. Is that clear, please? So please note, and let me quickly say this. This topic I'm taking you tonight, this topic will have impact on all the topics under performance management. Once cost is involved, you may be asked to estimate cost. After this topic, by God's grace, we are moving to price theory. We are still going to bring back this cost estimation. So what am I trying to say? You must have a good knowledge of how to estimate cost. It can enter budgets, it can enter pricing, it can enter any topic under performance management. All right. If there's no question, we can move to other discussion. Number 4, the high and low method. Method number 4, the high and low method. Let me quickly say that the first 2 methods, there's no calculation involved. But the last 2 methods, calculation we apply. The first 2 methods, no calculation. But the next 2 methods to be discussed is going to involve calculation. Method number 4, high and low method. This method uses the 2 extreme data points. This method uses cost information at the 2 extreme data points to determine the values of A, in bracket, the value of the fixed cost. Letter A represents fixed cost, and value of B, in bracket, the variable rate. In the equation, Y is equal to cost equation. y is equal to a plus bx. This is the equation of the cost function. The equation of your cost function is y is equal to a plus bx, where your y is the total cost, letter y is the total cost. Your small letter a is the total fixed cost. Small letter b is the variable cost per unit. And our letter x is the volume of production. That is the activity level. Please note, the activity level could be volume of production. It could be sales volume, depending on what the examiner is texting. So letter S represents activity level. The activity level could be volume of production. It could be sales volume. It could be labor hours, depending on how the question is framed. I hope that point is clear. Now, I haven't explained that. Conditions for high and low. Please note, 3 conditions must be in place for you to be able to use high and low method to estimate cost. 3 conditions must be in place to be able to use high and low method to estimate cost. What are these conditions? 1, there must be activities at the highest level and the lowest level. That is, you must have highest production level, lowest production level. Condition 2, the variable cost per unit must be constant at all levels. The variable cost per unit. What that means is that if a bottle of raw material is 100 naira, that means if I'm buying 2 bottles, it becomes 200 naira. If I'm buying 3 bottles, it becomes 300 naira. That means the variable cost per unit is constant. Per 100 naira. That is all. That's what it means. Then condition number 3, the total fixed cost must be the same at all levels. Whether you produce 10,000 or you produce 100,000, the total fixed cost must be the same at all levels. So please always watch it. If you are using high and low method to estimate cost, you must be able to establish that these 3 conditions are present in the cost you want to estimate. All right. Method involved or steps involved. This method involves the following steps. That is, steps involved if you are to use high and low method to estimate cost. 1, select the highest output level and the corresponding cost. Step 1, you are going to select the highest output level and the corresponding cost. Please note, this may not necessarily be the highest cost. So you are going to start with the highest output level. and the corresponding cost. 2, select the lowest output level and the corresponding cost. 3, calculate the variable rates using the formula below. Your variable rate is differences in cost divided by differences in activity level. Remember, the activity level is the volume of production. That is the output level. Calculate your variable rate. Once you calculate your variable rate per unit, use the variable rate per unit to calculate the total variable cost. Use the variable rate per unit to calculate the total variable cost. In this case, total variable cost is equal to number of units produced multiplied by variable rates per unit. Number of units produced multiplied by variable rates per unit. Then the last step, calculate the total fixed cost. Calculate total fixed cost portion. Your total fixed cost is equal to total cost minus total variable cost. These are the steps involved if you have to use high and low method to estimate your cost. Note, where inflation makes the cost in each period impossible to compare. That is, if the examiner should introduce inflation to the question, there's inflation. You have cost in month 1, cost in month 2, cost in month 3. The examiner says there's inflation between month 1 and month 2, month 3 and month 4. In that case, you are going to adjust your cost to the same price level by a means of price level index. In that case, you are going to adjust your cost to the same price level by a means of price level index. All right, any question, please? Before we move to the 5th item.
So, excuse me, sir.
Yes, Peter.
Sir, what do you mean by
I can't hear you. I'm not sure. Maybe I can hear you. I can't hear you. What do you mean by? Maybe it's network issue. Can anybody hear him?
No.
So I can't hear the guy's question. So if you come back online, we can attend to his question.
I also have a question, sir.
All right, this my colleague,
You said cost should be adjusted to the same price level by means of price level index. So how do we do that? What's the price level index?
Okay, maybe that was Peter's question also. You know what? Let's apply calculation to it. Is that clear? If you want to adjust for inflation, You know, it's just to deflate the cost, or put all the costs at the same inflation level. If inflation in December happens to be 20%, and inflation in January is 30%, that means I cannot compare costs in December with costs in January because they have different inflation rates. I will now take them to either 30% or 20%. They must be at the same price level index. So please, when we get to question tonight, Otimbeneko, we will be able to use question to explain how to reduce costs to the same price level index. Is that better, man?
Yeah, thank you very much.
Right. While we are, I think Peter is off the is not in the class. When he comes back, we can attend to his question. All right, number 5, regression analysis method. We also call it linear regression analysis method. This method is also known as the least square technique. And this is a statistical method. Regression analysis method is a statistical method of estimating costs using historical data from a number of previous accounting periods. Let's repeat that. Regression analysis method is a statistical method of estimating costs using historical data from a number of previous accounting periods. It is a method of regressing Y on X. It uses cost equation. Let me put the cost equation here. The cost equation Y is equal to A plus BX. The same thing we explained. Where your Y is the total cost, of course, the Y is the dependent variable. Your dependent variable is your total cost. The X is the independent variable. That is the volume of production. Your small letter A is still the fixed cost. Your small letter B is the variable rate or the variable cost per unit. Unlike high and low method, this method uses statistical formula to determine the fixed cost and variable cost per unit. Unlike the high and low method, the regression analysis method uses statistical formula to determine the variable cost per unit and total fixed cost. We should be familiar with this formula, but let's do a recap. Remember in our maybe foundation class or our previous class, where we have learned regression analysis, to calculate your B, the B is the variable cost. The B is equal to, of course, the formula is stated in the book. I'm just trying to write again. N summation xy minus summation x summation y divided by n summation x squared minus summation x into bracket square. Your small a is summation y. Let me move this up a bit. Divided by n minus b summation x divided by n. Your n is the number of observations. Your y is the dependent variable. That is the total cost. Your x, independent variable, volume of production. Your B, your variable rates, and your fixed cost. You can use this to estimate your cost. To round up this discussion, we look at the conditions for the use of linear regression in estimating cost. The first condition is that there should be an underlying linear relationship between the two variables. There should be an underlying linear relationship between the two variables. What this means is that one variable must depend on the other variable. Like total cost of production is dependent on the volume of production. That means total cost is dependent. Volume of production is independent variable. One must depend on the other. If you look at advertisement cost and sales volume, sales volume is dependent on our advertisement cost. Most likely, the more we advertise our products, the more likely sales we may achieve. That means if you want to compare advertisement cost and sales volume is independent. Why? Sorry, sales volume is dependent now. Advertisement is an independent cost. Sales is dependent on advertisement cost. So there should be linear relationship between the two variables. That is condition 1. Condition 2. we have explained it before, is that the historical cost should be adjusted to a common price level to eliminate the effect of inflation. At any point in time, you are trying to estimate cost, and there is inflation. You have to take all the costs, you have to take it to the same price level. Number 3 condition. As far as possible, the historical data, the historical cost should be accurately recorded so that variable costs are properly matched with the items produced or sold. And fixed costs are properly matched with the time period to which they relate. That means if you're in a real life situation, you must accurately record your costs. For equity professionals, okay, this is the cost incurred for the printing of student study pack. We are going to accurately record this cost. We move again. Cost incurred for lecturer fees. We are going to record this accurately. Cost incurred for payment for Zoom class, because we are going to also pay subscription to Zoom. We are going to record this. Cost incurred for data consumption. We are going to record it. All costs must be accurately recorded. We now say, okay, the variable cost should be recorded, should be properly matched with items produced. The fixed costs are properly matched with the time period related. Like this Zoom class now, the subscription we are going to pay to Zoom is fixed. We have paid for 100 students. If only one student enroll, we have paid Zoom to get a license. If only 2 students enroll, the fee we have paid is for 100 students, to be able to accommodate 100 students. If I check the online, only 13 students started this class with me. So, and we have paid Zoom to be able to obtain the right to use their platform. Fixed amount. We must record all costs and match all costs accurately to the items produced or to the time period. Of course, maybe we paid now, okay, we have paid for 1 year, the Zoom rise. That means we have paid for 1 year. All our lecture now, 1 year we have paid Zoom. That's a fixed cost. Last year we paid. The money paid last year must be recorded to the time period of 2024. If you are now doing our accounts, Zoom costs incurred for 2024 will be recorded against 2024. Zoom charges for 2025 will be recorded against 2025 time period. It will be wrong to record 2025 payments against 2024 period. Fixed costs relate to time period. Number 4 points. Management must either be confident that conditions which existed in the past will continue into the future. Management should either be confident that conditions which existed in the past will continue to the future, or amend the estimate of cost produced by the linear regression analysis to allow for expected changes in the future. Let me explain this to you. If you are estimating future costs from your historical costs, you want to estimate costs you are going to incur in 2026. You are now using the information for 2025 past cost. For you to use that information, you must be confident that the conditions that existed in 2025 will continue to 2026. If that condition is likely to change, then you must incorporate expected change in your future cost estimates. When you get to calculation, I will refer you to this aspect. And lastly, as with any forecasting process, the amount of data available is very important. What we are trying to say is that if you want to reduce error in your forecasting, try to use a lot of data. The more data you are able to use, then it will help you reduce error. All right. We have spent time with 1.5 hours explaining. Any question, please? Any question?
No questions, sir.
No question.
Yes, sir.
All right. At least me, we have question for the class. Let us start with let's start with question 2. So that at least let's start with question 2 is it's not as long as question 1. Okay, let me expand this a bit. Better. All right, I want to believe you can see my illustration 2. Can anybody read for the class? Let me even hear somebody people's voice also. But please, an option, if you want to read, you can just read for us. But any volunteer?
Yes, sir.
All right, Peter. Oh, you're back.
Yes. Yes, sir. Equator Limited has recorded the following total cost during the last 5 years in the cost information system. So I should read the table.
If it's convenient for you, you can do okay. We can all table correct. Look at the table from 2021 to 2025.
2025, yes.
We have the output in unit, we have the total cost, and we are giving the average price level index. Requirements, go ahead, please.
You are required to A, estimate the cost equation expected in 2026 when the average price index will be 180. B, what is the expected total cost in 2026 if 1,750,000 units are produced? Comments on your results.
All right, thank you, Peter.
Thank you, sir.
Now the question has been solved. Assuming we are faced with this question for 15 marks, the first aspect is 10 marks. Second aspect is 5 marks. How do we navigate this question? This question involves price level index. Now, if you look at this question, we are required to estimate the cost equation expected in 2026. 2026 is future year, because it is assumed that in this question, these companies in 2025 is now trying to determine the cost equation for 2026. In 2026, the average price level index will be 1.8. That is inflation. That cost is likely to move by an index of 180. The cost is likely to move by an index of 180. How do we resolve this? If you look at it, we have different methods of estimating cost equation. At least we have two. You can either use high and low method, or you can use regression analysis method. You can either use high and low method, or you can use regression analysis method. Because what you are trying to determine is that equation, y is equal to a plus bx. What is a? What is b? You now have your equation. Now, which method will fit in appropriately here? Look at the condition for high and low method. There must be activity at the highest level and lowest level. Look at the production volume. In 2023, oh, sorry. Sorry. In that was having my. In 2023, the production, we have the highest production, 1,350,000. In 2024, we have the lowest production level, 900,000. That means I have activities at the highest level, and I have activities at the lowest level. In this case, I can adopt high and low method to estimate my cost equation. Examiner may not tell you the method to use. In as much as you have activities at the highest level and you have activities at the lowest level, you are not going to figure it out. Definitely, I should be able to use high and low method to estimate the cost equation. Is that clear, please? You cannot go to the solution now. That okay. You can go to solution now. Okay, let me move this up, please. suggested solution. Although after the class, we are going to share the solution again with you. But I also encourage students, there's no crime in writing, no, because it makes you to be alert in class. Some, they will be in the online class, they're actually sleeping. They are just log on. But because you are writing, then it also makes you to be alert in class. So if you write, there's no crime. Take the, look at the step high and low. Select the highest activity level. Highest output. $1,350,000. Lowest output. $900,000. The step says select the highest activity level and the corresponding cost. What is the cost for the highest activity level? What is this is the output unit. Please, what is the cost for the highest activity level?
5,277,500.
Thank you. I just want to be sure that the class is also moving. The cost here is Naira sign 5,227,500. The cost for the lowest level is 5,040,000. We have selected the highest activity level. We have selected the lowest activity level. Now, ordinarily, we should move to step 3. But because there is inflation, we need to adjust this cost. Inflation in 2023 is at a level of 123. In 2024, it was at 144. In 2026, we expect the inflation to be at a level of 180. In this case, we have to adjust all the inflation to 180 because we are trying to estimate cost for 2026. In 2026, the inflation level will be at 180. In this case, we must adjust both the cost at the highest level will be adjusted to 180. The cost at the lowest level will be adjusted to 180. But you can go ahead with other steps. We must adjust this to the same price level index. We must adjust this to the same price level index. Just 1 minute, please. It's taking me back to. I'm trying to create some. I need to move this down so. Sorry, please. Okay, I'm trying to achieve a space here. Now look at the adjustments. I'll come here. Adjust related costs to 2026 price level index. Price level index. Look at the adjustment, please. For the highest level. Highest level. It becomes 5,227,500 multiplied by in 2026 is going to be 180 divided by for our highest level. That was in 2023, Abby. Look at the price level here. 123. Just pick this and say, okay, divided 180 divided by 123. Please work this out. That will give you the price, the adjusted price for the highest level. Please get your calculator closer. 180 divided by 123 multiplied by the 5,227,500. What do you have, please? You can send in the response.
7,060,000.
7,650,000. 650,000. That's correct. Then move to the low level. Also adjust. Just 1 minute. At the low level.
Okay.
At the low level, the total cost to be adjusted. This is 5,040,000 multiplied by, in 2026 is going to be 180. In 2024 is 144. Is that not?
Yes.
Please adjust to the price level. What do you have?
6,300,000.
So this is how to adjust for price level index. You have taken the two costs to 180 now. That means in 2026, the cost inflation will be 180. Thank you, please, Alex. Thank you. You have taken the two to the same price level index. So always watch it. Once the examiner brings in inflation, you are going to reduce to the same level. We have taken this to both cost to 180 inflation level. We can now compare. We can now go back now. We can go back now to our computation. Now come here. High and low, high, low, output. Output will not change. This is 1,000,000,350. This is 900,000. Then the adjusted cost, this is in Naira, this is 7,650,000. Second one is 6,300,000. Now look for the differences. Differences between the two outputs, 1,350,000 less 900,000.
Output 450,000.
This is 450.
1
This is
million.
in, don't forget. What do you have here?
1,350,000.
350,000.
350,000. Thank you. Your step number 3. Calculate your variable rate. Your variable rate is, that is the variable cost per unit. Variable rates per unit is equal to differences in cost, divided by differences in output. This is equal to the cost 1,350,000 divided by number of units 450,000. Please, what is the variable rate? That's 3 Naira, is that not?
Yes.
3 Naira. You have gotten the variable cost per unit. Once you have your variable rate per unit, calculate the total variable cost. Your total variable cost can either be calculated at the highest level or at the lowest level. The total variable cost can either be calculated at the highest level or at the lowest level. I'm going to do both. Look at it. Calculate total variable cost at high level or at low level. At the highest level, we produce 1,350 units. Is that not?
Yes, sir.
That means our total variable cost is going to be 1,350 multiplied by 3 Naira per unit. That will give you total variable cost at the highest level. At the lowest level, we produce 900,000. That becomes 900,000 multiplied by 3 Naira. That will give us, this becomes 4,050,000, or this will give me 2.7 million. That not?
Yes, sir. Yes, sir.
2,700,000. You can now get your fixed cost. Fixed cost, total fixed cost, total fixed cost. Our total fixed cost is total cost total cost I don't want to come to this. I want to do the work here. Minus total variable cost. If you look at highest activity level, total cost is 7,650,000. I will now come here minus total variable cost. That becomes 7,650,000. Let me erase it so I don't cancel. Yes. 7,650,000 minus 4,050,000. That will give me the fixed cost. How much? 3.6 million. Is that not? 3,600,000. Now check the low level. At low level, total cost is 3.6 million.
6.3.
So, sorry, 6.3 million. Pardon me. 6,300,000 minus, this is minus total variable cost.
2.7.
2.7. Differences is what?
3.6.
You see it now? Whether at the highest level or the lowest level, the total fees cost must be the same. Can you see it? Is that clear, please?
Yes.
I've just used the two, high and low. I've just used in exam. Once you pick high, you don't need to pick low. If you are trying to calculate total cost, total variable cost, and total fixed cost, just decide anyone you want to take. You can either calculate your total variable cost at the highest level, or you calculate at the lowest level. The fixed cost will be the same. I've only showed these two working to confirm that the total fixed cost is the same, whether at the highest level or the lowest level. Is that clear, please? You can now give your equation. Can you imagine? Wow. You're now making as if you are in physical class. Because the same calculation we are going to do, we also do in physical class now. Let's move this a bit up. Okay. Okay, it was deliberate. I don't want to put this on this. I want it to be on this. Okay, don't worry. I'll move this down a bit. I need to achieve some space. Problem. I'm just trying to. They are trying to break through this. They are getting some space now. I think it should get better more. I should have gotten space now. Okay, let me see. Just 1 minute. I'm trying to move to the next sheet. Amy is greeting us. He's not joining the class. We are in class. Oh, please 1 minute. I know. I know. Let me to save time. Let me just draw this here. I'm not able to get this page. This one. Can't space it inside now. No. I must bring it back now. They just 1 minute. Can't space me inside now.
Why don't you try to undo, then it takes you back to that level instead of that to go down.
I want to do something. I just want to check something. See, we'll just be holding you there. I want to round up this one. In fact, if I'm just to round up this question. Wow. Okay, let me do something because I cannot continue to hold the class down like this. Okay. Okay. I'll find a way around this before I share this thing to you guys. Because we can't be holding the class down for a technical something that's now we have gotten. Let's go on. The cost equation. We have calculated, if you recall, our variable cost. The variable rate per unit as computed was 3 naira. The total fees cost. The total fees cost as calculated, we got 3,600,000. Therefore, the cost equation for 2026 cost equation for 2026 is equal to Y is equal to A plus BS. Your A is the fees cost. Therefore, Y is equal to 3.1 plus your B is your variable cost, 3x. This is your term mark. Your cost equation is 3.6 million. Y is equal to 3.6 million plus 3x. This is what the examiner will. Expected cost equation for 2026 is equal to Y is equal to 3.6 million plus 3x. That will give you your term mark. Is that clear, please?
Sir. Sir. Hello, sir. Okay,
Yes,
so
please.
now I know that in an exam situation we are not supposed to write there's something like 3.6 million. We should actually spell it out, isn't it? Like for the fixed cost now, you wrote 3.6 M, but for exam purpose.
Okay, yes, that could also be because M can represent on that thing. Okay, yes, 3,600,000. Thank you. Because that letter M could also mean something to another person. Yes, I think I understand your point. Is that clear, sir? I understand your points. Yeah, I understand what you're saying.
Thank you.
Yeah, I think it's better. Okay, now let us write it fully. That is, I think I agree with you. Because that letter M could mean another thing. So it's better to say 3,600,000. Thank you for that. That's good. That's good. So you are done with the A part. I will try and bring back the calculation. I don't know why instead of moving to next page is going, I don't know. I'll try and bring it out, but we can't be holding the class down for that. So you are done with the A part. The B part says, what is the expected total cost in 2026? If 1,750,000 units are produced, we can easily get this now. We can easily come here. and say, okay, the B part of the question. B. Expected total cost. If production in 2026 is 1,750,000 units. It's just to go to your equation now. Y is equal to 3,600,000 plus B. Letter X. S represents volume of production. Replace it here now. Intro bracket 1,750,000. Please work this out. 3 multiplied by 1,750,000. What do you have? Y is equal to 3,600,000 plus
5,250,000.
5,250,000. Y is total, please.
8,850,000. 8,850,000.
850,000. You are done. Next is just to comment and round up. Next is just to comment and round up. You are done with competition. You now need to comment on your competition. Comments. What will be the comment here? You have estimated cost. Are you sure this estimate will be right? Will it be accurate? If you have to comment on this, you are going to say, look at the comments. Please, if possible, write this. If you can take this comment, fine. I will send it to the class F. The equation Y is equal to 3,600,000 plus 3x was predicted from data with output values ranging from 900,000 to 1,350,000. Full stop. Depending on the degree of correlation, depending on the degree of correlation between X and Y, we might safely say we might safely say that the estimated equation will only be valid. We only be valid if forecast is within the range. Any forecast outside this range may not be accurate. Now, what we are saying is, if you look at the cost information that we predicted between production from 900,000 to 1,350,000. But the forecast in B, we are trying to forecast production for 1,750,000. But the cost we have used, look at the range, is between 900,000 to 1,350,000. If the forecast you are trying to do in 2026 is within this range, then your cost may be accurate. Your cost may be valid. But if your forecast is outside this range, then the cost estimate may not be accurate or may not be valid. I hope that point is clear. So when you are commenting, you are going to look at the range you have used to determine your cost estimate. If you now want to forecast for future period, if the range is outside, then there is the likelihood that there could be error in your cost. Is that point clear, please? Is that point clear?
Yes, sir.
All right. So please know how to comment on your calculation. Any question, please? Any question? We have like 5 minutes, 10 minutes. All right. We'll stop the class here if there's no question. By God's grace, we meet next week to continue the class, the discussion on this. May God give us a better understanding. I will be checking out of the classroom. Let's remain blessed. Good night and God bless.
Good night, sir.
Good night, sir.
Yeah. Alex, any question?
Can you hear me?
No, I can see you put sir question mark. Any question?
Yes.
Any area of concern before we shut down the class? Okay, we are waiting for your question. I was just waiting. Okay, variable rate, what happened to it? You want me to explain variable rates? No, that you can put Naira sign. Okay, okay. Should we put Naira sign? That is, you can apply Naira sign. That is not even the, we know that the Naira sign, this Naira is the sign for Nigeria. So whether you put it or not, they're not going to penalize you for that. You can either put the Naira sign or not. The examiner will not penalize you for that. All right, good night. Thank you for your time.